Good afternoon, everybody. Phil Simons with Columbia Grain here, and your Friday afternoon weekly grain market recap. Well, we did have quite a bit of information to digest here today, as we did get the June acreage report along with the stocks numbers, but it didn't come until after about 10-minute delay, as there was a little bit of a snafu in their reporting system. Ultimately, we did get the numbers, but they were a little bit bearish in terms of corn, wheat, and beans, quite honestly. So I'm going to share my screen with you again here. We're going to navigate over to our favorite website, columbiagrain.com. And in the upper right-hand corner, we're going to take a look at the Producer Solutions tab, which takes us over to our Producer Solutions link where we house all of our pertinent data. Again, what we're looking at here today to wind the week down was the quarterly stocks numbers and the acreage report. And again, the numbers were actually fairly bearish. When we take a look at where we were last year at this time. So again, when we're trying to compare today versus last year, we're going to see some pretty substantial changes here in the quarterly stocks of grain. For corn, to start off with, we're coming in at just under 5 billion bushels. And last year at this time, we were just over 4 billion bushels. So again, the yearly difference, or the percentage change from last year to this year for corn grain stocks in the U.S. is actually up 22%, pretty substantially, given the numbers that we're actually looking at here today. Double whammy on corn, quite honestly, is going to come from the acreage report, or potential seeded report for acreage on corn. We actually see it coming in at just under 91.5 million acres. When we take a look at how that actually compared to the initial March planting intentions report, it was actually up about 2%. From the numbers that we got in March, which is just over 90 million acres. So again, 1.5 million acres higher than where we were just a few months ago. So kind of a double whammy on corn here today, which definitely had the futures for corn market a little bit of a tailspin to wind a week down here. On soybeans, similar fashion for the grain stocks, we're actually up 22% from last year. And similar fashion over on wheat, we're actually up 23% when we're comparing today's numbers against last year's numbers. So again, definitely quite a bit more grains in the U.S. than what we were handling last year in terms of the grain ones, or the June 1 stocks numbers. For soybeans on the acreage report, really not a huge difference. We were down about 410,000 acres there. From a percentage change over the March numbers, not a really significant factor to look at there. When we look at the all wheat, we were down about 1% on average for all wheat. The one that's really sticking out right now is going to be durum. Durum acres were actually up 7% from the March initial estimates in March. But when we look at the numbers that we received today and compare those to last year, we're up about 29 to 30% in terms of seeded acreage for durum. So again, something to definitely continue to monitor as we go forward here. When we're looking at the corn area planted by state, we do see that the Western Corn Belt is really the benefactor in terms of increased acreage and where those acres are coming from. So something to definitely continue to monitor as we go forward, and the potential weather implications that we're going to continue to build into these markets as we move forward. But bottom line, again, we did increase the seeded area, the planted acreage for corn in the U.S. by about 1.5 million acres from the initial planting intentions back in March. So definitely having a more of a downward pressure on the futures markets as we're continuing to move forward here. On soybeans, again, not a huge change. We did lose about 410,000 acres from the March planting intentions report. You can see that it's pretty well scattered throughout the U.S. in terms of who gained and who lost. When we look at the durum acreage, again, we're not talking about too many states. The numbers aren't that big, but when we do look at the percentage change was actually rather large. We do see that North Dakota was the biggest benefactor in terms of an increase in acreage, along with Montana. So again, just definitely something to continue to monitor, and any weather implications that we could see impacting corn, wheat, beans, whatever it may be, as we continue to move closer and closer to harvest. But again, as we wound the week out here, really the corn market was the center of attention, really in a little bit of a tailspin with the kind of that double whammy that we were talking about earlier. But the weekly range for corn, for new crop corn, we did see a weekly range of 43 cents there. And week on week, we did actually lose 34 cents in new crop corn. When we look at new crop beans, we had a weekly range of 32 cents there, and a weekly change of a net loss of 17 cents. When we turn the page and look at the wheat complex, quite honestly, the wheat complex has been getting the majority of the attention really over the last couple of weeks to actually the last couple of months. But this week was fairly subdued on the wheat complex. The ranges were actually fairly decent. You know, we do have Kansas September had a 24-cent weekly range, but the week on week change was down just a penny. So nothing of really substance there. On Chicago, we did see a weekly range of 30 cents and actually wound the week out with a net loss of 3 cents. And in Minneapolis, had a 22-cent range over there and wound the week with a net loss of 4 cents in Minneapolis wheat for new crop. So again, just really trying to look at the holistic approach here, looking at the knee-jerk reactions that continue to happen, you know, as we see the supply and demand numbers, and specifically in corn this week. But again, we do have an awful lot of weather that we're going to continue to build into these markets. So really can't stress enough the importance of getting your orders out there and working. And quite honestly, looking at both the higher end of the market and the low end of the markets, especially after looking at some of the supply and demand numbers today. Put your pie in the sky numbers in. Also look at your sell stops. Where do you need to get out? Where do you need to have your pricing orders in? So be sure to get a hold of your local merchandisers, buyers, and managers. Get your orders out there and working, and look at all the different tools that we have in our Columbia Producer Solutions. Other than that, we're going to go ahead and wrap everything up for the week here. Next week, we will have an abbreviated week as we have July 4th. But other than that, we are going to wrap everything up here. But remember, the first 5 letters of broker spell broke. Have a great weekend, everybody. We'll talk with you next week.